So you want to invest in Web3 but you don't know what tokens to buy? You can use SwissBorg's Thematics instead. They select a collection of the best performing Web3 tokens and rebalance them upon performance. So you don't need to worry about going all in on an absolute steaming turd. Sounds good to me. SwissBorg. Hello everybody, welcome back. We'll make a quick video. It's just an addition to yesterday's video. We'll look at Bitcoin, but we'll start with the close now since the traditional markets are not going to be open until Monday. So this is the Euro, and we're going to look at Euro and the Dixie, but they're more or less the same. This is why we focus on the Euro. I know everyone likes the Dixie, but the Euro is the main driver, I would say. And so we're seeing a breakdown now, a closure below most moving averages with the 200 exponential sitting down here at 106.7. Well, it doesn't have to come down to this level, but I think it's more likely that it will. There might be intermittent bounces along the way, the first one being 107.3. So that could be bounce City FM. But if we come down that far, and we do have a bounce, I think it's only going to form a lower high and then go back down to a lower low. The next lower low would be here. So to be fair, I would be looking for shorts on the Euro next week. Now we might be seeing some form of bounce prior to that level, Monday, Tuesday, Wednesday, at some point next week, and we'll see if this actually starts to form a downtrend. And I think shorts might be the more appropriate way to play Euro on this one. So maybe the dollar does start to gain strength. Now obviously we've seen that it's like I'm telling you what's already happened, but I'm telling you what I'm expecting to see happen somewhere along the lines next week. Should say a move into this area, this 109.4, where we get rejected from and then start with a downtrend. So a downtrend on the Euro would correspond to an uptrend on the Dixie. Trading view is going to be stupid, so I'll bring the Dixie up on this one here. Right, so the Dixie is basically exactly the same as the Euro, just opposites, right? So we can see a strength of trend moving. We had a pump signal that was generated down here. Now we're at 102.7 pump City FM. We'll be looking for a move back down into these lower ranges, back down to 102, and then probably a bounce from there. So that's on your 4 hourly. If we take it to the daily, what have we got down at those levels? We've got 101.7, we've got 101.8, and we've also got 102.3. None of these are being particularly relevant. I think that it's all a euro dollar move, and that's probably the best way to try and trade it, really. It's a forex pair. The Dixie is just a barometer of the overall strength or weakness of the dollar, and most of it is being driven by the euro. So that is that. So long story short, when it comes to forex and Dixie, we're looking for a pullback, then a bounce on the Dixie, or a bounce and then a pullback on the euro. What's this going to be for S&P? S&P still looks okay on the 4 hourly. We'll just get rid of this. We'll start all over again on over here. S&P doesn't look too bad, in all fairness. Doesn't look too bad at all. This is S&P on the daily, still just about above most moving averages of significance, with a potential of moving up to the top of the range. This would be what we would expect with the start of the move on Forex next week, being a pullback on the dollar and then a bounce. So this is still a bullish chart, so we would expect a move up and then a rejection. Whether we get a higher high, a higher local high on here, and then a pullback is different. We don't really know. Remember, the Dixie and the dollar, it helps with uptrends, it hinders with downtrends. So it's not the secret sauce, but it's all part of the overall trading environment, which is why we like to look at it before we look at anything else. Just because the Dixie moves up doesn't mean that everything will move down, although it makes it harder for things to move up if that's the case. It depends how bullish stocks and indices and everything else is. Everything can move up together, but it's not often the case. Gold still sitting at the consolidation level here. The consolidated into the 20 and the 21. That's fine after the breakout from the falling wedge. Again, still a very bullish chart. Looks a lot like a Bitcoin chart, but better. It's a lot of these charts have all done the same thing. Are we looking for a pullback now, or a bit more of a significant pullback? That's the question. So that's your daily looking actually okay. Lots of drives of hidden bullish divergence on the way down. So if we do come down further, which we may, 2000 to maybe 1991. Would be the area of bounce, but at the moment, yeah, probably still further consolidation, although we could be getting picked up here, which is your Bollinger Band Center on the daily. So let's have a think about Bitcoin now, shall we? And then we'll leave this video because there's not a great deal more to say about it. The hopium would be implied at this level. Like we were talking about yesterday, we did snugly touch the 200 simple moving average on the weekly. That's where we were seeing a bounce from yesterday. We were doing the live stream last night. We saw ourselves come down a little further and then bounce from that. At the moment, the weekly is yet to close. A closure above the 200 weekly is going to be good. Closure below it is going to be bad. But all the same, what I would say is, if we do close below the 200 weekly, this whole area here, all these moving averages from anywhere from the 200 weekly, 26,000, down to the 200 exponential, 24,000, is a buy zone. All right, buy in here, buy zone. Right, that's what it is. It's a buy zone. And we're not talking about long derivatives, 100x zone. We're not talking about anything like that. Even altcoins, I suppose. It's not, we're thinking about Bitcoin because Bitcoin is still in an up trend on a weekly. Don't need me to tell you that. You don't need all these indicators to see that. Still an uptrend. And again, 4-year market cycle, blah blah blah. This is the beginning of the bull market. And remember what bull markets look like. You do remember what a bull market looks like, right? It's not the up only aspect of the later stage of the bull market. The bull market for the most part looks like this. This is a 2-year period where it went up, down, sideways, basically within a relatively large range, and then bang, all the way up. That's kind of what we'd expect to see. That's kind of the expectation. That's probably most likely going to be the outcome. And so if this is the case, what we could be seeing is another move up at some point this year, up into the upper 30s, then a move down, then a move up, then a move down, and then at some point like that. Or we could be looking at this. We could be looking for a move down, then a move up, then a move down, then a move up, then a move, and then up, and there you go. Either way, this is likely to be the majority of the bull market area, right? This is it. This is your bull market, the humble beginnings of a bull market, which is why dollar cost averaging is the way forward, whether it's for Bitcoin or for altcoins. Remember, eyes on the prize, right? You're looking to accumulate, you're looking to buy, you're looking to invest, or even trade, I suppose. You have to be aware of what a bull market looks like at this stage. The S&P is also going to be in the same kind of way, I would imagine. The S&P is going to be like that. The S&P is broken out from a descending triangle. It's finished its bear market. As far as I was concerned at the time, this was the low for stocks. That's where I stocked up on stocks, and then yeah, we came out and broke out. This is likely to be an accumulation. So here we go, something along these lines. This is going to be a range, maybe a little higher, maybe we move a little higher. This is going to be an accumulation range for stocks and indices. There are black swans that could bring this back down and lower. Of course there is. But in the absence of a black swan, the chances are the technicals assume that this is going to be our range, and we will move up and away into 2025 and beyond to carry on with a up-only chart, which is what the S&P basically is, all right? So that is the deal for Bitcoin. That is the deal for the S&P. That's the deal with the overall economy and markets. There are still problems in the general economy. There's still geopolitical tensions over in Eastern Europe. There's still quite a lot of things that could, rear their ugly heads, which can, well, basically add a little spanner into the works when it comes to the way that the technicals look. But that is the deal, right? That is the deal. And so if you're looking to accumulate, dollar cost averaging into any low that appears on any of these charts is the right thing to do, with a view for the next few years to think about selling towards the end of 2025. That's the deal. And so what we'll be thinking about is basically dollar cost averaging, buy, hold, stake your altcoins, pick up your Bitcoin on the way down to this $24,000 zone. If we edge down even further, it's not a big deal. Like I say, you can rotate that into altcoins at a more significant high on the dominance chart and more significant lows for altcoins. Either way, the higher term timeframes do imply still that this is an uptrend, and the uptrend is basically coming down to form a higher low, and that's what you should think about. All right, we've gone up. Okay, we're coming down. What do you do when you go down? You buy. And what do you do when you go up? You sell. It depends on your overall outlook and time frame, but the sell zone really is going to be around 2025 at some point, new all-time highs on Bitcoin. And so if that's the case, your risk to reward right now would be something along the lines of this. So let's just say you bought today, not that I'm saying you should. All right, we come down by another 40%. 40% risk, to what could be several 100% gain. That's an appropriate risk to reward, to be honest with you, on something like crypto. And this is why we like crypto. Big gains. You don't get big gains without big pullbacks. It's a volatile asset still. And Bitcoin does still suggest that even at this stage, we're still in an uptrend. However, if we're a little bit more conservative, you would be looking for further downside over the next few weeks and months. Consolidations are always going to be long and drawn out, especially after a 100% gain from the bottom to the top. So long story short, there might be a turning point now for euro and obviously dollar, which means yeah, consolidation and downside would be, well, would be expected, although not guaranteed. But the main thing to take away from all of this is that this entire area for this year and probably the majority of next year is going to be one of accumulation, whether you accumulate from a higher zone, which is towards the 30s, or a lower zone, which is towards the lower 20s. This is the accumulation zone, and the end goal. I mean, it's not for me to say that we're going to reach X amount. That's clickbait stuff, really. I don't know where we're going to go, but are we going to move up? Yeah. And is the risk to reward okay? Yeah, it is. So, in my opinion, try to take yourself away from the 1 minute, 5 minute, hourly, 4 hourly, or even daily charts. Think about the weekly. If trading is not your thing and you're basically looking to invest, then all of this red that is about to come, if it does, is just opportunity to stock up for what would be the long term. And again, there's nothing wrong with doing it with altcoins either, but we've recognized that altcoins have gone to Wrecked City. And we'll probably go further to Wrecked City, although the risk to reward on, you know, the decent, good top to medium cap ones are still actually okay. But always think about your portfolio as a way of managing risk in the first place. If you're going to be buying into crypto, then you should still think about having majority, whether it's 40 or 50% of that being Bitcoin. When I get new people into crypto, you know, these like people I know, you know, that ask me about it and say, oh, what should I buy? I always say, look, get 50% of your overall portfolio in Bitcoin and Ethereum. And they're like, well, how far is that going to run? And I said, well, probably not that much, but the chances are is that they're unlikely to go to zero. And yeah, you might only be looking for a 100 to 500% gain, but that's good, right? That's good. And then that other 50% you can spread into, you know, top cap, medium caps, and then some absolutely awful, terrible cap, you know, zero cap coins, which will probably work out just fine anyway. But you're spreading your risk, all right? You're spreading your risk. And so, you know, all of this time now, if you're not involved in crypto and you do want to get involved in crypto, it's your time to start to dollar cost average into these sort of things. Not wait for the ultimate low, and not go all in at one place, but find what it is that you want to buy and start to spread your fiat or your tether into those things for what is going to be the long haul. And remember, the long haul is not even that long. We're talking like a 2-year period, 3-year period max, and you're spreading into this area. This area is basically going to be a carbon copy of what we're seeing right now. We're going to be seeing something very similar to that all the way until probably around this period on the chart, which is quite a long way off. Anyway, that is basically all I got for you. In the short term, things actually don't look too bad. We're above all those moving averages on the weekly. We're still above the 200 simple and exponential. Although I probably would expect a retest into the 24s, where I will actually stock up quite a lot. Obviously, the biggest buy, other than obviously I did a trade where I bought from here and sold at 19,500. And then I bought quite a substantial amount of Bitcoin at 21,500. All of that, it's not to be sold, not to be touched, that's to be left. And the next big buy I'll be buying will be down into the 24,000s. That's where the next big buy for me will be. And yeah, I'll leave it as that. If it goes down further, no big deal. I might even buy some more. But still, yeah, my eyes are on the prize. The prize is several years away. That is not a long time, really. It really isn't. In fact, you will find, you know, that will fly by in crypto. And when you own Bitcoin, you can use Bitcoin as a trading pair into altcoins as and when the time comes, just to stack more sats, get more Bitcoins, and that is all part of the game. Anyway, I will leave it with you there, but I hope you have a nice day, a good weekend. I've got to get my ass out, so I go swimming 2 days in a row. Kids love to swim. So I'm going to go do that now. And yeah, let the chart do what it wants to do. Long story short, a weekly close above that 200 simple moving average, around 26,000-ish area. That's basically where we were, 26,000. Weekly close above there is actually still quite good. And, you know, any day that we're above there is good, because that's a building block of a more significant uptrend. Recognize that the 200 weekly moving average is still in an uptrend. So this is going to be a support. With every week that goes by and every week that we're above it, support gets higher and higher. And look, we're above almost all the major moving averages on the weekly. I'm not looking for any catastrophic downtrend to take place. And if it does, it's just a consolidation, which is overdue in many ways from a 100% gain. And the Dixie is probably going to have an uptrend form sooner rather than later. Although at the beginning of next week, I would expect to see a pullback and probably some upside on everything to form, probably for something like the Euro and maybe even Bitcoin, a lower high. But we will see. We will see. We're speculating over the weekend when these markets close, but it does look like the short term would be a bit more further upside before downside, but might lead to a lower high. So just be aware of all of that. I still think that this portion of the market is one for either dollar cost averaging into it or playing very short term derivative plays. Right, I'll leave it with you there. Thanks for watching, guys. Hope you have a nice weekend. Take it easy.